Well, in '98, I listened to our chief economist, my father, who was very carefully recommended to be safe and to be in German government bonds and out of emerging market equities ahead of the crisis, because deficit levels are very high and seemed quite clear that it was coming. In 2008, my father, in fact, had been foreseeing a crisis as early as 2006, as early as 2007, but unfortunately, by the time the crisis came, we were dependent on a prime broker that wouldn't allow us to go short anymore, because they cut all exposure limits to Russia. And so we were stuck with relatively illiquid assets, and we thought we could hedge by going short against them, but we couldn't go short anymore, and we therefore lost a lot in 2008. The lesson is really to have a clear segregation of assets, very liquid assets in our Wermuth Greater Europe Fund now, daily liquidity if needed, and illiquid assets in closed-end funds or the funds with long duration to get out. Well, in Russia, of course, there's been huge volatility over the years. Roughly, Russia is 1.5 times as volatile as the US market. We found that having done basic in-house research, bottom-up research for value opportunities on the long side, and also short candidates, helps a lot to get started. But then really what has been successful over the years has been the quant strategy, an automated entry and exit system, which once you have picked the candidates to go long and the candidates to go short, will find the good entry points and the good exit points and automate the entry and exit. The strategy has generated about twice the return of the market since 2005, with about half the volatility, and it's up about 5% this year when the market is down nearly 30% year to date. The same strategy we apply to US markets, where in 2008 the strategy made 137%. So this, of course, is extremely tight risk management, automated exit as soon as the stock falls, and that works very well in Russia. Well, unfortunately, when one talks about Russia, 7 out of 7 questions are about political and regulatory risk and the rule of law. And it's a shame, because I'd like to talk about the qualities of a specific investment we picked, but we can't. We have to deal with political and other risk first. Our special insight is that I worked for 4 years in the finance ministry of Russia as the head of the economic expert group in the ministry as a German. So I have very, very good insights of how the government works, and to many of the leaders in power today who used to work with me or I used to work for them. And so we think this is very important. We monitor it very closely, and we believe Russia has a chance to grow as much as 10% per annum, become a booming economy, if it now reforms as announced by President Medvedev, and hopefully to be implemented by him when he becomes Prime Minister. To start with, of course, the reputation of Russia is terrible. People call it the armpit of the world in terms of reputation, not very nice. People ask me, if you default in 91, you restructure in 95, you default in 98, the assets of Yukos, assets of BP, assets of Shell stolen in the view of investors, people killed in London, people killed in Dubai, people killed in Vienna, killed in prison. Why invest in Russia? It's very difficult. People ask me, is it moral to invest in Russia? People are challenging me. They say, you are a Chamberlain, the man that went to make a deal with Hitler, because I still promote investing in Russia. The reason we still invest in Russia, and the reason we see change, is that the '98 default brought macro stability. The 2008 crisis brought clarity to President Medvedev and Prime Minister Putin that they have to get away from oil and gas, and they're implementing real changes. We've seen approachments with the EU, we've seen friendship with the US, we've seen border agreement with Norway, we see World Trade Organization entry, we see possibly common economic zone with the European Union, and all these things, if and when implemented, will be positive. Also positive, of course, that Russia has outsourced the highest legal authority to the European Court of Human Rights. It's not what Putin or Medvedev thinks, it's what the Court of Human Rights in Strasbourg thinks. That's law in Russia. In 3 cases already been implemented in Russia. That's very positive for Russia. The fact that there's a fight against corruption, the former mayor of Moscow has been dismissed, The incomes of the civil servants are published. All of this is good news, and we hope that Russia is on the right track to do better, even though, of course, for now, people are again spooked because they feel Putin is back, and that's very bad news. He's going to have to prove that it's good news. In 10 years from now? Yeah. Well, for now, of course, Russia, if I may quote Warren Buffett, the great investor, feels a bit like a mosquito on a nude beach. Yeah? There's very few competitors. There's almost nobody who uses shorts the way we do in the hedge fund space. Our quant funds are therefore able to generate outstanding returns. So far, there are about 4 or 5 asset managers in the alternative asset management space. If you look at private equity, real estate, and clean tech, where we're also invested, again, very few competitors. For Russia to become a proper base, a global financial center, which is the goal of the government, it will have to make asset management in Russia more attractive by, first of all, putting in place a proper rule of law, the proper political environment. And again, I think Russia has a chance 10 years from now to be one of the financial centers of the world if it gets policies right. And then, of course, asset management is great as well.